Greetings, everyone. We are very excited to have Vox Royalty Corp back on the Emerging Growth Conference. Today, we'll be speaking with Kyle Floyd, Chief Executive Officer, and Spencer Cole, Chief Investment Officer. And they're here to talk about Vox's transformational acquisition announced yesterday after market close. Vox trades on the NASDAQ and the TSX under the symbol VOXR. Welcome, Kyle. Welcome, Spencer. How are you gentlemen today?
Fantastic. Thanks, Anna.
Doing well. Thanks, Anna.
Wonderful.
Well, it's great to be back on the program with everybody. We're beyond thrilled to announce the acquisition that we put out to market after close yesterday. This is a transaction Vox Royalty Corp and our team have been working on for the better part of now over 6.5 years, 7 years. And this transaction is really emblematic of really everything Vox is all about for our shareholders. We have a competitive advantage in terms of sourcing royalties. We have a very, very experienced technical team that's able to analyze royalties from a geological perspective, from a mining and engineering perspective. And we have tremendous discipline around what we look for and what we expect to achieve for our investors, with the capital that we invest on behalf of investors. And so this transaction has been many years in the making. We think it's one of the most significant transactions in the sector over the last decade, certainly from a relative value perspective. It has the hallmarks of what is a cornerstone royalty for our business and a cornerstone royalty in the marketplace generally. And we've been able to acquire at fantastic value for our business and our company and our shareholders. And so it's a transaction we're really excited to dig into the details on. This is a transaction that, given the amount of time that we've been working on it, it's been something that we've been really excited to talk about the market with. And with that, I'll turn it over to Spencer to walk through some of the slides that we've prepared.
Yeah, thanks, Kyle. Firstly, I will be making some forward-looking statements, so I'd refer listeners to the disclaimer on our corporate presentation on our corporate website. So in terms of the deal that we've just announced in the past 24 hours, as Kyle mentioned, this is something that's been in the works for quite some time, and we're extremely excited to sort of share further information on it today. So what Vox has just acquired is a portfolio of Australian royalties, 9 separate royalties for a purchase price of 6.75 million Aussie dollars in cash, which equates to about $4.3 million US. The portfolio is heavily weighted towards gold and copper. It covers and has quite significant exposure to some really exciting recent mineral discoveries. We believe some of the key assets in this portfolio have real sort of near-term production and revenue potential. And ultimately, with the volume of work that's going on these properties, we think there's quite a high likelihood that these mineral resources are likely to expand. Now, a number of these royalties are quite, were established a number of years ago, decades ago in some cases. So one of the key assets in this portfolio is a gold royalty called Red Hill. This is operated by a $13 billion major Aussie gold producer called Northern Star. And historically, this gold asset has actually already been mined. The previous royalty holder has already been paid over $7 million when the project was mined back in 2003 to 2007 at significantly lower gold prices. This gold project was last mined at gold prices as low as $400 an ounce. So this Red Hill royalty is really, I guess, one of the cornerstones of this portfolio. And importantly, the royalty is a 4% gross revenue royalty. So a top line royalty, which is the type of royalty we typically focus on as Vox. And importantly, it covers the majority of a really exciting recent gold discovery at the historical Red Hill pit. So in May of this year, so less than 6 months ago, there was a maiden resource of 1.2 million ounces of gold, an inferred resource that was disclosed by Northern Star about this discovery that's been made in the last 18 months. that's substantially covered by our royalty. And ultimately, we think this new discovery at Red Hill has potential to generate, over $5 million of annual potential royalty revenue for a period of up to 10 years. So I guess that's one of the reasons why we're so excited about this deal, is having exposure to really exciting assets like Red Hill that we think have quite meaningful revenue potential over a very long dated period. When we look at the Red Hill asset and the discovery, importantly, it has access to existing processing plants and mills. So it's located approximately 3 kilometres from the Kanowna Bell mill and approximately 20 kilometres from the Kalgoorlie Super Pit, which is the site of the Fimiston mill, which is undergoing a major expansion to become one of Australia's largest gold processing plants at the moment. Importantly, this is obviously a portfolio of 9 royalties, so there's more than just Red Hill. The portfolio also came with a really exciting copper royalty called Horseshoe Lights, and the operator of that project is exploring some innovative ways to generate some early revenue later this year. I touched a little bit on the Red Hill royalty. So this was a past producer, but really from sort of 2008 to 2021, there was very little work done on this gold property. In 2021, Northern Star recommenced drilling. The historical operation was only mined to about 120 meters below surface, so they barely scratched the surface per se. And then in 2021, when Northern Star started drilling out the historical open pit, they started discovering significant broad gold drill intersections that pointed to this new discovery that they've just announced in May of this year. I think it's worth touching on some of these gold drilling results that they've announced are some of the broadest that we've seen in Western Australia, particularly at these types of gold grades. Intersections are in excess of 340 meters or 160 meters at 2.8 grams. For those generalist investors, that might be hard to sort of fathom and understand, but the broader these gold intersections, particularly at these grades, which we believe are very economic, particularly with adjacent processing plants. These sort of drilling results from Vox Management's perspective speak to an ore body that we strongly believe is highly economic, particularly at these high gold prices. And then in terms of how we expect this royalty to progress from here, Northern Star has highlighted that they view this new exciting Red Hill gold discovery as a bulk mining, so large tonnage development option that they think has the potential to displace grade and tons from some of their other deposits. So we're very optimistic about, I guess, over the coming quarters. We expect further drilling. We expect the mineral resource has strong potential to grow, and ultimately we expect this project will be brought into production in the near term. I touched on briefly Horseshoe Lights. So this is a past producing high-grade historical copper mine. It was last mined in 1994 when they were mining grades of up to 20 to 30% copper in ore. So to put that into perspective, most producing copper mines are currently producing at between 0.5% to 1%. This mine historically produced ore, effectively unprocessed ore, as high as 30%. So effectively, you can dig up the ore and export it straight away, which is quite an anomaly, really. So a really exciting copper project, one of the largest copper projects in all of Western Australia. We think there's a number of aspects to this project that are quite exciting. There has been a historical engineering study done on the project back in 2014 that highlighted up to a 6-year mine life. Since then, there's been substantial drilling and the resources has been firmed up. And another sort of aspect that gets us really excited about this copper royalty is also we think there's potential for this deposit to be a source of ore for a nearby copper operation, the Sandfire's DeGrussa mine, which has recently been put on care and maintenance because they reached the end of their mine life. So, we think there's a path and a world in which where horseshoe lights could become, an interesting source of copper ore when that DeGrussa mine changes hands. It's subject to an ongoing divestment process. So when you look at the historical scoping study numbers that the operator put out on horseshoe lights, we think there's potential for, annual revenue of up to about $2 million a year based on those operator numbers for a period of up to 6 years. So a really exciting sort of copper development opportunity that has meaningful byproduct credits in gold and silver as well. Those are the key assets that we wanted to run through. Kyle, maybe it's worth touching on just, I guess, summarizing, VOX's differentiated factors and how this deal really sort of, exemplifies those factors, perhaps.
Yeah, thanks, Spencer. Well, one of the core tenets of VOX is that we look for value, and value is not, I would say, prevalent right now in the royalty sector, broadly speaking, in terms of royalty companies are paying very, very high prices for assets. Generally, what we've seen is an average of 1.4 to 1.5 times NAV for assets such as these. And so an opportunity to acquire what we believe is circa $100 million of value with 50,000 gold equivalent ounces for a little over $4 million is really unheard of in our sector. And in the 15 years that I've been involved in the sector and 10 years of deploying capital, I have yet to see a transaction where this type of value was acquired knowingly by a royalty company. And so, it really kind of comes back to the core competitive advantages of VOX and the discipline around executing our business on behalf of our shareholders. We have a tremendous advantage in terms of sourcing royalties such as these through our database. We have a technical team that is scouring the world every single day for interesting developments on mining assets, going into our database to see if a royalty exists over projects that we like, and then ultimately, hopefully procuring these assets at fantastic valuations. And so this royalty transaction is really emblematic of our systems, our processes, our advantages that we deploy every single day tirelessly for our investors. And so very excited to be able to bring this transaction into the portfolio. As Spencer's alluded to, we believe these are going to be very, very high quality operations and for a very long time. They also have tremendous optionality. And I think that's something that we're going to be excited to be sharing with the market as we continue to get new and additional work done on these projects that we can put out into the market. One of our key core advantages and where we are able to really leverage our IP is in Australia. We have two executives that are from Australia. We understand the geology, we understand the infrastructure, we understand really, I think, the Western Australian mining landscape probably better than any royalty company, at least in our market cap range. And so we're able to leverage the, I would say, overwhelming positive momentum in the cycle in Australia. You've had essentially almost all-time highs in gold prices and on Australian dollars for nearly 4+ years. And so what that means is that projects in Australia are getting developed at a faster pace, they're well capitalized, and they're well incentivized to move these projects forward. And so that thematic is really bolstering our royalty portfolio, and it's the second largest holding of hard rock mining royalties in Australia after Franco-Nevada. And so it's an advantage that I think that we have over any royalty company in our segment of the market, and an advantage that we will continue to deploy to the benefit of our shareholders. Our database, as I mentioned, is extremely strong in Western Australia. That was really the genesis of the database. It's allowed us to find really fantastic value consistently, whether it's gold royalties, copper royalties, iron ore royalties, and over assets that are about to go through some pretty major transformations. So our discipline around looking for royalties that are anywhere from, say, a quarter out from first production to a couple of years out from first production is really we're able to find deep value. This acquisition of the Red Hill royalty is a prime example of that ability to look for interesting developments on assets and then have assets that are going to come into production and produce very meaningful returns for our investors. You can see this is just a slide of some of the case studies already within the portfolio of Vox that we've been able to achieve for investors in terms of returns. The Janet Ivy Gold Royalty, it's part of Australia's largest heap leach gold operation. Bought that royalty for $5 million. We expect it to do over $2.5 million for up to 10 plus years. We are expecting a 10x return on a royalty that we bought from a hearing aid technology company for $200,000. That could do $500,000 for, again, a very long mine life. And then we've already realized a 15x return on a royalty that we bought as part of a portfolio where we received an early payment for a discovery. And that has up to 50x potential in terms of its return on invested capital. So that's really a metric that we focus on. We're not looking for necessarily, this is a question that we get quite often, we don't have an IRR benchmark. We obviously value the assets that we're bringing in and have a very, very high threshold for what we expect to generate returns. But ultimately, we're searching for a multiple on invested capital. And that's what you see most of our royalty transactions delivering for our investors once they enter production. And that's allowing us to buy assets at disconnected valuations and taking advantage of those dislocations of market prices. You can see the revenue growth that we've realized for our shareholders. We went from essentially pre-revenue in 2020 with this strategy to 9.7 last year. Analysts expect us to do $11 to $13 million. We haven't updated that guidance yet. So we'll stick with that guidance for now. And we have a tremendous amount of projects that we expect to come online over the next few years, Red Hill now being one of those as well. So we believe that our portfolio is one of the strongest in our market segments. It's generating the highest returns on invested capital. This slide gives you a good background of some of the peers in our industry, the types of returns they're generating versus the type of returns that Vox is generating. And I think there has been a little bit of a question on, well, has Vox been lucky? Or do they truly have systematic advantages and discipline that allow them to be more successful in deploying capital? We believe our model and our discipline and those advantages is absolutely driving excess value for our shareholders and alpha in our industry. And we'll be able to continue to press that advantage for the benefit of our shareholders. That's allowing us to deliver what we believe are some of the best financial returns in the industry. We're paying a dividend. We've had exceptional revenue growth. And we're trading at a remarkable discount to both our net asset value and relatively to our peers. So for an investor that's new to Vox, you might say, well, why Vox and why now? We fundamentally believe that we have the best business model for risk-adjusted exposure in the commodity sector. That's why we exist as a company. That's what we aim to execute on behalf of our shareholders, is driving risk-adjusted returns. And I'm very proud of the track record that we have to date. There's still a tremendous amount of work to do. Our business development pipeline remains very, very robust. While I think we've set a very, very high bar for the quality of this transaction, I remain very excited about what's in the portfolio and what our business development team is working on. So, while I can't say that there's a carbon copy of this acquisition out in the market, I can tell you that what we have in the pipeline is extremely interesting. And we're going to continue executing with the same discipline and the same principles that have allowed us to deliver these types of returns for our shareholders. And so we're excited about the trajectory of the company. We're excited about what we have in front of us. There are tailwinds generally for the industry. There's tailwinds for Vox. So we think we're very, very well positioned to deliver growth for our investors, both from the fundamental perspective, which we've been driving a lot of value, but also hopefully from the market value and our share price.